NVIDIA touching that $4 trillion market cap. So this was the first publicly traded company to do this. Of course it was going to be NVIDIA if it was going to be anyone. And we saw the stock finish just under that 4 trillion level. Microsoft right on its heels, 3.7 trillion. Even a company like Apple, which has struggled so far this year, still trading above a 3 trillion market cap. Now it's interesting to see some of the other players within the NASDAQ 100 that have these trillion plus valuations. Even a company like Broadcom, which isn't really widely known from the everyday American, by the everyday consumer, still above 1 trillion. And I think this speaks to how we're in this era that's different from the dot-com bubble. We always talk consistently whether we're in this AI bubble, but if you look at the bulk of these companies, these are growth plays. They have real solid earnings. There's momentum there. And I think it just speaks to this moment in time that we're in, considering a lot of Wall Street strategists have been telling us that we're only in the first innings here.
Yeah, it's a remarkable milestone for NVIDIA and CEO Jensen Huang. Key question for NVIDIA investors, do you think those big tech companies were Jensen's big customers? Any sign there that they're slowing down their AI spend? We had analysts on the show today who covered that name. No sign to them, they said.
No sign, and I mean, we'll get that update, right, in the next few weeks, the next few months with earnings. So NVIDIA one, I have my eye on, and then also the great rate cut debate rages on, and we've been talking about this all week long, but President Trump had this to say on Truth Social, calling for at least 300 basis points worth of cuts, so very aggressive here. But what's interesting is that Wall Street is starting to weigh in, and they're not necessarily disagreeing with the president. Piper Sandler, Michael Kantorowicz, he said that at this point, the average American consumer has been weighed down by the high tariffs, particularly in the housing market. And the worry here is that that could contribute to stagflation. So everything sort of boils down to housing. If you don't fix that, that's where you could potentially get into some trouble. So not to say that he's calling for the 300 basis points of cuts that Trump is calling for, but there is this argument emerging, okay, maybe we shouldn't be too late to cut, which obviously is the big debate on Wall Street. And this all comes as there's two Kevins emerging as the possible next Fed chair. This is according to the Wall Street Journal. Kevin Hassett, Kevin Warsh. We know that President Trump wants a more dovish Fed chair, and that's brought up conversations of whether or not this will be a shadow Fed chair, whether the Fed can still be looked at as truly independent. But you have to remember that there are multiple FOMC participants here, so no matter who the president picks, you're still going to want to have the bulk of those Fed officials on board with their rate cut decision. So it doesn't automatically mean that we're going to get rate cuts.
Yeah, with Warsh it was always interesting, Allie, because I don't think of Warsh as dovish. With Hassett, which is if he did pick Hassett, I guess the market would think, okay, well, then we got cuts coming. He must be aligned if he picked him. And then it would be interesting just how the markets, stock and bond markets, react to that.
And Scott Bessent, right? The Treasury Secretary, he's another name that's been thrown into the mix. So it really just depends on who Trump wants at that moment in time.
We shall see.
We shall see. And then finally, tariff weakness, a dip buying opportunity here. And this was a paraphrased quote from Stuart Kaiser over at Citi. And it made me start to think about the past year and really what we've seen on the retail trading side. And if you look at the market, particularly the S&P 500, since those April lows, we saw a lot of that dip buying occur around here. Retail investors really driving this upside swing, pulling those institutions along with it. We saw a little bit of a dip recently. That was after those Middle East tensions, but now we're on the up and up, surging back towards those all-time highs there. So as long as we can continue to wade through some of these tariff uncertainties, some of that volatility, we should probably see some bumpiness this summer. But strategists are saying that we still have more room to run here, and maybe earnings is that next catalyst.
Yeah, it is interesting the way Trump just fires off these tariff letters. And like today, Allie, the market just shrugged.
Shrugging it off. It's the taco trade.
All right, thank you, Allie. Stick around, much more Ask for a Trend. That's still to come.